Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode.
Welcome back to the Commercial Property Podcast. And today we're talking about the high street. And what I love about investing in high streets and in retail is that the bad news that has been in all the press and has been widely spoken about is definitely putting a lot of investors off. And what's nice about strategies where there's a lot of noise around them is that there's some opportunities in niches that basically work outside of where the noise is. Now, obviously, you need to know what you're doing. You need to understand investing locations, and you need to understand how to make money from those locations and from those properties. But the fundamental of kind of swimming against the tide, of being, I suppose, a kind of very grand way of putting it would be like a contrarian investor. I think there is a great opportunity in the market at the moment. So let's just recap in terms of what has happened in the market so that we can understand kind of where we are today. So my background, as many of you will know, is in commercial property for 30 years, but I've worked in corporates until 2015. I was employed by corporates. And lastly, in my career, I worked on very large shopping centre portfolios. So I have been very intimately involved in the retail market. And my observations from being involved in that market, both from an out-of-town perspective and from a high street stroke shopping centre perspective, is that every location is different. And there are some locations where retail is booming and others where it's not. And so I will unpick today in terms of some of my observations on that from kind of many years of working in that space. But where the market basically is when I started out in property kind of 30 years ago, you could pretty much let anything anywhere. So any type of commercial property. There was a lot less property in those days, but talking about the high street in particular, what's interesting about the high street is that it was literally high streets. Now, what happened? People like my old employer, Land Securities and Hammerson and British Land and all manner of investor developers came along and built a lot of shopping centres. Now, they're not in every location. And I think kind of it's always interesting to look at these things in retrospect and kind of look at the impact that they've made. And you will know that there are some locations, some high streets, where there might be 2, 3, 4, 5 even shopping centres of different sizes. There's usually one in that case that really kind of is the prime shopping centre where most of the retailers want to be. But there are usually a lot of secondary centres. And what shopping centres meant at the time when they came along was that they basically were, so the early shopping centres were basically providing units that were the right shape and configuration for what retailers were looking for. So retail evolved from small lock-up shops, and then some of these brands like Next and obviously brands that were around like Topshop, River Island. They wanted, we call them MSUs, medium-sized shop units. And the high street is very difficult to cater for that demand on the high street because they're big. They're big properties. And so shopping centres came along and, basically catered primarily for those kind of uses. So what a shopping centre would tend to include would be 1, 2, maybe 3 anchor tenants, latterly more anchor tenants, but I'll come on to that in a minute. So that would be like the House of Frasers, the John Lewis, the Debenhams. Now, obviously, lots of those brands aren't around anymore. You may have like a cinema also anchoring, to bring football in at different times of day and night. And then you would also have these MSUs, these medium-sized shop units, and then you would have some lock-up shops. And really, a lot of the money is made in the lock-up shops, the smaller shop units, and previously in the medium-sized shop units, the MSUs. And different parts of the centre performed well because of football and kind of where the different entrance ways were coming in. But what usually happened, not always, but what usually happened on the high street would be that retailers that were maybe on the high street, people like Next or River Island or Topshop or bookshops or whoever, they would be enticed to go into the shopping centre and/or would actually really want to go into the shopping centre because the shopping centre would fit modern retail size requirements. A lot of these leases were historical, their brand had changed and grown, and therefore a lot of these stores were maybe undersized or the wrong shape or in the wrong location. And so shopping centres basically catered for that demand. Now, latterly with shopping centres, we were putting a lot of experiential stuff in there. So, an events program, a lot of leisure, a lot of restaurants. They were all going in and to drive footfall, basically, especially with the rise of online shopping. A lot of, people won't get off their sofa necessarily to go and buy a pair of jeans, but they will get off the sofa to go out for dinner with family or friends, or go to the cinema, or obviously the competition with cinemas these days. So the reason I'm talking a lot about this is because there's a lot of locations where there are, these shopping centres don't just go away, where there is just too much retail. And, a lot of these shopping centres are now, especially the secondary ones, are really struggling to let the space in the shopping centre and, having to give away incentives, especially in the lock-up shops. And so basically, a lot of towns and cities have just got too much retail space. And there's some retail locations, like, Guildford's a good example, where actually they were desperate for many years to get a shopping centre. Nothing materialised, but actually, in hindsight, it actually potentially is a good thing that they don't have a high street, have a shopping centre, because the high street is doing really well. Yes, maybe some of these retailers that aren't in their ideal size requirements, but actually a lot of retail's requirements have shrunk now anyway since COVID. So, maybe coincidentally or on purpose, some of these places have definitely dodged a bit of a bullet. So the reason I'm kind of going to a lot of detail about this is because there's certain high street locations that you absolutely want to avoid. Surefire signs, or maybe one very large or 2 or 3 shopping centres, lots of out of town development, you're going to struggle with retail there. Now, whilst I say you want to avoid, what I'm talking about here is longevity. So something that will always let, where you'll get really long leases, where there'll be some competitive tension from tenants. Like, you're not going to get that when there's loads of empty units on a high street and it's a tenant's market. They can pick and choose, because what happens is, especially the brands, they will look for long rent frees, maybe some capital contributions, because, to come into your unit. And certainly that is happening a lot at the moment. Your mom and pop, your smaller SME type businesses are a bit less aggressive than that. But equally, if they've got the pick of, 10 units they can go to, it doesn't take a rocket scientist to work out that, the odds are going to be against you in terms of getting really long leases or, really great lease terms and the rent that you're looking for as well. So it's really important to understand those dynamics in investing locations. And there's always deals to be done. So even in locations where maybe there are a lot of units, are there conversion opportunities? Are there other Class C uses that you can bring in? Could you convert to residential? Or are you buying it for such a cheap price that actually you can afford to hang on to it, do relatively short-term letting, because eventually over time, the fundamentals are not too bad and actually it will come back. So there's so many different types of deals that you can do. But personally, I don't particularly like looking in cities. I think that a lot of locations there's always exceptions to this rule, but a lot of locations are basically overshot. There's too many shops in them. So what do we need to be looking out for? So just kind of going back on my little history trip. So I left the corporate world in 2015. I think we all knew at that point that retail was overvalued, but there wasn't really anything that valuers could hang their hat on to slash value. So what happened was that maybe there was like death by 1,000 cuts. Rents were being nibbled at, values were being nibbled at, and then when COVID came along, the valuers took it as a massive opportunity to cull values, because obviously there was nobody going to shops for a period of time, nobody going to restaurants. And so that gave an opportunity. Basically, we accelerated about 10 years in terms of the trajectory of where retail was going. It all got brought forward very, very quickly. And I think we all knew what was happening in the retail market. So these trends were accelerated. And what that's meant is that all these headlines obviously have come about, retail's dead. And of course, we did see a lot of brands falling by the wayside during COVID. They were the weaker brands who had poor balance sheets, who basically were always going to be tipped over the edge when there was a problem like this. So it's almost like a forest fire when the dead, when the dead wood goes, and then new life kind of comes out the back of it. So now post-COVID, we've seen all these headlines, we've seen values being culled. And I think it's fair to say that a fair amount of retail now, I in my view, and it's not the same in every location, but a big chunk of retail I think is undervalued. Because what happens when markets, you have a big shock like COVID, is that actually right across the market, from the very best kind of properties to the very worst, they all get culled in terms of value, and sentiment basically governs that. So that's what valuers have done. And so there are some opportunities on the high street, I think, where you can pick up properties for a really great price, and you can asset manage them to add value, and they have great longer term potential as well. And obviously that's always what we're looking for when we're looking at commercial property. We're looking at the longevity, we're looking at whether it ticks the boxes for the trends. So an example of that is, smaller towns, maybe whether it's got wealthy demographics or whether the demographics are quite the opposite of that. But what you need is a captive market, lots of people coming to visit or kind of living nearby, lots of chimney pots. You've got a location where, as I say, there's a short high street. I think supply and demand is really a thing you need to be looking at. And of course, if there's limited supply and really good demand, that's when you're going to see rental growth. That's when you're going to see longer leases. So that's the kind of high street that I like to look at. I think works really well in the market at the moment, and I think that it is a great opportunity. And so while the masses are thinking that all retail is dead and is really struggling, then there are these niches, these pockets of retail that I think are working really, really well, and where there's still demand.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So what we need to be looking at is basically some of these investing locations that absolutely buck the trend of where sentiment is, where the headlines are screaming. That's what we want to look at. And so small high streets are good, wealthy, smaller towns are good. Maybe larger towns and cities that don't have shopping centres. Shopping centres themselves is an interesting one because you can pick up a secondary shopping centre now for about 35-40% yield. And, they would have been somewhere between 8 and 12-15% at one time. So is that a buying opportunity? Well, maybe I know too much, but for me, it isn't. It's not something that I want to have as my strategy because they're hard work shopping centres. You're managing a lot of tenants. The trends are definitely moving against you. But having said that, anything that you pick up for the right price can work. And so if you're willing to put the work in, maybe look at, make sure you've got multiple exits, definitely longer term redevelopment options, then shopping centres potentially can be an opportunity if you can pick them up for the right price. But it's definitely not for the faint-hearted. You definitely will need some professional help from managing agents, letting agents, and so as I say, definitely not for the faint-hearted, but definitely an opportunity for the right type of investor. So, I think that what I want to leave you with really is that whenever I see headlines screaming out about something, what I try and do is I try to look at where the opportunity is in those headlines. So, if all retail is dead, then where are the pockets where it's not dead? In fact, where it's thriving. And I'm investing in locations where retail is absolutely thriving because they're really short high streets, because there's lots of non-seasonal tourist trade, and because there's very, very wealthy population, big houses. And, they bat above their weight, those kind of locations. Equally, one of my clients is investing in a location where the demographics are quite low. There's quite a low quality housing, but because car ownership is very low, lots of people shop local, and therefore that's working really well. So, it's finding those niches, and you'll have noticed, if you've listened to this podcast before, you will have noticed a theme with it in terms of finding the niche, working out what's working local to you or in your investing location, and then kind of basically being very grandly a contrarian investor, but basically going where the supply and demand are in your favor. And, looking for those kind of opportunities can really get you a competitive edge. And so what can you do today to go around and do that? Well, look at the newspaper headlines, especially local newspaper headlines. One of my favorite sources of market research. Go to business forums, not just property forums, like local business forums, great source of intel. And really importantly, get to know commercial agents well, kind of pick their brains on viewings about what's happening locally. And also in terms of, making sure that you get out in the car. It's very difficult to do desktop research. There's so many wonderful packages where you can do your commercial property research, everything from Searchland, Nimbus, CoStar, all fantastic. But actually, there's nothing like getting in the car, driving out around investing locations and really getting under the skin of it and understanding it, walking high streets, working out where the footfall is, working out where the brands are clustered, working out, how many letting boards there are. That's stuff that you can't do at your desk, and you need to get out in the car and do it. So the high street, I think, it is not dead. In fact, it's far from dead. But I think in some locations, there's just too many shops. So the skill of the astute commercial investor is to find those locations where supply and demand works in your favor and buy at the right price so that you can do some asset management to add value. And lots of podcasts, my podcasts about how you can do that. But I'll do that in the future as well, so that you can add value And, as people start to value retail more in some of these locations, the values will come back. So happy investing. Thanks for listening, and I'll see you next time.